Internal control. This is defined as the system of policies and procedures used in a company to promote efficient and effective operations, reliable financial reporting, and compliance with laws and regulations. It's the processes that a company's management uses to help the company meet its operational and financial reporting objectives. For internal control, there are 3 assurances. 1. The company's operations are effective and efficient. 2. The company's financial reporting is reliable. And 3. A company is complying with applicable laws and regulations. There are 5 components of internal control. Firstly, control environment. This is the atmosphere in which the members of an organization conduct their activities and carry out their responsibilities. It reflects the overall control consciousness of an organization. Integrity and ethical values of personnel is a significant factor in an organization's control environment, i.e., standards of behavior. There are other factors, for example, philosophy and operating style of management, assignment of authority and responsibility, and general structure of an organization. Overall, this is corporate culture or corporate structure. The second part is risk assessment. This is the identification and analysis of the risks that threaten the achievement of organizational objectives. Organizational risks can arise from both external and internal sources. External sources might include new competitors, whereas internal sources might include inadequate workforce training. Once an organization identifies its risks, the risk can be analyzed with the following general process. Estimate the significance of a risk, assess the likelihood of the risk occurring, and consider what action should be taken to manage the risk. The next part is control activities. These are the policies and procedures management establishes to address the risks that might prevent the organization from achieving its objectives. These can be split into 1. Establishing responsibility. 2. Maintaining adequate documentation. 3. Segregation of duties. 4. Physical security. And 5. Independent security. Information and communication refers to the need for an open flow of relevant information throughout an organization and requires both upward and downward lines of communication. Monitoring refers to the assessment of the quality of an organization's internal. This can be accomplished in 2 ways. Firstly, through ongoing activities, and secondly, through a separate evaluation. However, there are limitations of internal control. Regardless of how well it is designed within an organization, it can provide only reasonable assurances that a company is meeting its objectives. It is limited in its effectiveness because of 1. The human element, as people make mistakes, and employees can purposely circumvent controls for personal gain. And secondly, cost-benefit analysis, which refers to the cost of implementing a control activity versus the benefit that the control provides.